newsletters.
The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition with the Power Trading Hour. That's me, your humble, lovable, and squeezingly soft host who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, we've got a lot going on. The bill is not going to get signed or passed today. Apparently, there's some mistakes in it that would allow someone to claim unemployment and actually make more money than if they went to work. So, well, they got to clean a few of those things up. Some of the biggest hurdles, though, seem to be looking like they're over, and that is that instead of having a roll call vote in the House, it can be, or they're going to be able to do it with just acclamation, so a lot of people don't have to come back to get it and try to get through the air system. Most of those folks have already gone, or a lot of them had already gone home. So we just need a handful of people to yell yay in the House. And apparently Nancy Pelosi's given up on a lot of the things. The political tide went against her on those. So just an acclamation vote. But a few of the sticking points, like being able to make more money staying at home than going to work, have to be kind of ironed out. They say that's going to take yet another day. So we shall see. And I think that we kind of turned earlier in the day with a lot of rumors of ETFs being what would you call it? Not excommunicated, being especially the long ETFs. There were a few rumors floating around those would be done. I'm going to say 2 years ago, maybe a year and a half ago, I talked and opined, because I look at short data all the time, that you could no longer get short data onto ETFs. And yes, you can short a long or short ETF and even the multiples. The interesting thing was that they said, well, some of these ETFs were 200 and 300% shorted. And so the idea was, or at least the SEC, someone talked them into saying, well, you really don't need to know how many people are short the ETFs because it, 300%, it just doesn't make sense. It'll confuse investors. Their poor little sappy minds. They shouldn't be able to know. Now, that data is still available if you're willing to pay big bucks, like I think it's like 10 grand a month. So very tough to get that kind of data. Only a handful of people on the street have it. But after that started to get a little traction, I think we started to see some people start getting a little worried, because if they rolled those ETFs out and made people pony up, they may have to actually buy a lot of shares back to get that going. Now, normally that doesn't, buying or selling that is taken care of by the underwriter of the ETF. But an interesting idea. You never know the unintended consequences of some of the stuff that people do. But it does shine a little bit of light on the cockroach. There may be a bunch of them, other ones running around also. And the unintended consequence could be a massive short squeeze. At least I think a lot of people ran for the covers earlier on that. But it's the only thing I could really come up with when I looked through the news was a lot of those rumors about both Fed, Treasury, SEC talking about leveraged ETFs kind of going away. Yep, nobody's going to be there. All hail AOC. Okay, what else do we have going on? Oh, we wanted to look at the volume. Volume did start to shrink a little bit yesterday, so we'll see. Not going to shrink today. We're already doing 10 billion shares. And again, I think a lot of people hop back on. I did see a lot of shorting earlier in the day. So I wouldn't have been surprised at a lot of people thinking that, man, you got the one big bounce. We've shorted every other big bounce and made a load of cash. But I generally, when you do this, the way that you see the top of a move in a bear market is that the last 15 or 30 minutes, people short all day, and they have to cover before the end of the day. If we start seeing sell-offs in the last 30 minutes, 45 minutes of the day, that may tell you that the froth of the turn in the market might be waning. So again, generally last 30 minutes of the day are a big indicator compared to a lot of what happens during the day running by high-frequency traders and reading headlines, that kind of stuff. So just keep an eye on that. Again, some of the other big things going on in the market is just the massive swings in the dollar. Right now, 101 and 2 cents to 101 and 3 cents. And, of course, a lot of the bigger moves in things like gold, which is, down 29? Is that right? And silver off about 40 cents. And crude kind of flat around 24.61. And regular gas up, is that 22%? I think that is. I saw that earlier and ran up and filled up all my vehicles. So that's where I went at lunch. Okay, you can email me at path@tfnn.com. You can always call at 877-927-6648 or put a message in the den. Okay. Okay, go back and see a handful of these. Okay, I think that's it. We can do a little history, and then we will move on with the rest of the show.
Just a little bit of history repeating.
On 1911, this day, in one of the darkest moments of American industrial history, the Triangle Shirtwaist Company factory in New York City burns down, killing 146 workers on this day. The tragedy led to the development of a series of laws and regulation that better protected the safety of factory workers. Blank and Harris, the owners of it, had already a suspicious history of factory fires. The Triangle factory was twice scorched in 1902, while their Diamond Waste Company factory burned twice in 1907 and 1910. They probably should have changed the name of their factories to Zippo, because they always light. It seems that Blank and Harris deliberately torched their workplaces before business hours in order to collect from large fire insurance policies they purchased, not an uncommon practice in the early 20th century. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we'll get on to a little bit of chart work. I said I would work on Confluence, and let me do this here. There, should have a list of a few. We talked about confluence numbers. Confluence levels are when two different Fibonacci retracement levels, the 618 and the 682 of one and the 618 of one and the 382 of the other, he said, come together. And that's where you can see some fairly decent resistance and support levels. Doesn't mean that it's going to stop there, but if you're trading, generally you want to know where those levels are. And if you're not a long-term investor, that's where you want to look. Now, of course, the longer the term, the better. But it's not uncommon to see a lot of stocks pop off bottoms and then race back up. Good example is this one from Advanced Emissions. You've got several confluence levels. You want to take the longest one that you can find with the narrowest band. In this case, that'd be long-term would be like 757. But right now, we are finding the first resistance at about $6.26. And if you just mark all these up and down in both sides of the market, at tops and bottoms, these work. Now, the one thing that I will say about confluence levels is normally when they work out over 3 to 6 months. They take up a long time to set up these patterns. This is probably the shortest level of confluence levels that I've seen. So I don't have a lot of data to say that these work as well as the ones that take 3 to 6 months to set up. But they are good values, and so far we've seen a lot of these actually show that is where you're looking for your support and resistance levels. Archer Daniel Midland has a nice one at about 35 bucks. You're 35.52. You're at 34 bucks already. So the question is this little one that's in the shorter time frame important at 33 bucks, or is it more important at 35? If it can close over the first one, normally that is when you're saying, okay, if it closes over the first level, which is shorter, you look for the next level to go higher. So ADM would be saying that you want to look at 35.52 is probably the extreme level of resistance. You have some that blow right through them. And you did that yesterday with advanced micro devices. So, if you're in a deal where you think the market's going to close well, just hang on to it to the end of the day. If it closes above the confluence level, then that means you can move to the next level. For advanced micro devices, that means $50.20 is open. APPN, good example here. Confluence level is 42.72. You're at 41.92 right now. You don't have a lot of volume. The last 3 days up or light. That is it. You either want to sell now or you want to sell with that lighter volume directly into that 42.72, the 42.37 area that is set up. Arconic, ARNC, this is a good example of what you're looking for. $11.38 was the low. You get the two prior highs, $34.27 and $24.51. That sets up about $19.49 to $20.20. You're at $16.68. If you bought this off the lows, you bought it yesterday, then one of the things you want to be looking at, because you can, is these in advance. And whether or not you wanted to buy at $11 to sell at 19, which I think is kind of an easy answer for that one. But when you're setting up your risk reward before the market turns, what you're looking at. BCRH. Again, this is working the opposite side of this. This is the bullish side of a confluence level. You've got that at 16.28 to, well, literally it's a penny different wide there. So you did go back into it and you closed back over at $16.50. But if you were trying to buy on the pullbacks, Blue Capital Reinsurance Holdings, BCRH, good example of longer term confluence levels coming in at the highs and showing you where retracements should go. Belden, the company makes high quality cable, and generally the professional's choice in the electronics business. They tend to make the best. Anyway, a good example of having kind of smaller time frames and then longer time frames. You generally want to look at longer time frames in confluence levels. In Belden, that would be 37.91. You're 35.85. The question is, as long as the market's moving with you, you probably do it. If it starts acting weak, you don't get the volume, then sometimes you want to take that money a little bit earlier. Here's another good example of a stock that really hasn't moved off the bottom yet. But if you wanted to start looking at it, if Berkshire Hill Bank Corp gets any better or starts moving better, things recover. Not bad setups out here. What is this thing? About $12, about $13, but it was $11.43 a couple of days ago. But you already know, or you can guess what the good resistance level is going to be. It wasn't that long. It was December. This was $33.72. A recovery back to $20 suggests that wouldn't be a bad play at $13 to $20, but you kind of do that too. Okay. You can email me at path@tfnn.com, or of course you can give me a call at 877-927-6648. And we won't spend the whole day on these, but I did want to show you this because I found a bunch of these bond mutual fund or municipal funds look like today's kind of the big push, and it's over, and it's a light volume. BSE, this is BlackRock New York Municipal, coming right up to what should be very, very active resistance levels. Of course, the total loss theory out with the Feds and coming in with the bailout program. but that doesn't mean things are going to get that much better. You've had about a 15% bounce in this, but from what you could see in these kinds, I've seen so many of these that I suspect that the people that are covering a lot of these things, this may be as good as it gets, at least for a while, but up to 1178. But BSE is the symbol on it, and kind of nice looking stuff. When we come back, we're just going to start looking through some of the bigger stocks, some of the ones that really are moving today, see if we can see anything in what's happening, and kind of define the tea leaves, if you know what I mean. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. What did I have out here? I don't know, but it's missing. And that makes me worry. Okay. Oh, I do have it.
Dave's not here.
Okay, I found it. Anyway, Dave is here, by the way. We're going to look through the big movers in the market. First one I want to look at is American Airlines Group. Of course, bailout kind of the second day. 1849 is the last high. Certainly some very big deals out here, but of course you had to throw some very big dice. Question is very capital intensive. In 3 months, will that still look like a great deal at 18 bucks? I think there's a lot of back and fill to be had. Some of the other companies that are getting some love from the trade deal as it continues to evolve and the text begins to leak is Aflac. And because mostly they won't be playing out a huge amount and two people, the government's going to handle a great deal of it, up to $37.16 today. AIG, similar stuff, but a whole lot more damage to the stock itself. It's up a little bit into this gap down from the 16th. That gap down had about 15 million shares. You got about 8.2. So we're kind of running into some very headlong downtrend volume. Don't be surprised if we stall out in the next 24 hours. But a lot of these little stocks, percentage-wise, huge moves today. But again, a lot of these things were massively shorted. And once the ETF started moving, it also kind of continued a short squeeze from yesterday. Align Technology, the clear braces manufacturer, up today. Volume's okay. Is it fantastic? No. You had 1.5 million shares down on the 16th. You got 1.2 million shares. So you got some decent volume in that today. Anthem Electronics, a nice reversal up here today, but not a lot of juice coming back into these gap downs from the 16th that had 2.8 million shares. You got about 2.3. I don't think there's going to be more volume, but it's fairly significant. Avalon Bay Communities, a REIT and rental area company, up on fairly light volume. These companies, even if they have a bounce, I think it's going to be short-lived in the real estate sector. These are probably going to be the ones that take the longest to get off the floor, even though they may be benefiting from some short squeezes today. Boeing actually going to get back into production on the 737 MAX. Looks like they're going to get their type certificate. And talk about $90 to $174 in a handful of days. The proposition for Boeing was always a good one for the products. And, of course, the problem was that they decided to kind of short. They change American software programmers for those overseas. And that ended up costing them massively and dearly. But 174.77 again, they're making them. We can only assume that they're going to get the green light to put those new 737-800 Maxes on. Even if these things don't carry passengers, they'll carry freight, and they will do it at an incredibly cheap level for the price. Probably 10 to 15% less on gas for each one. I didn't have the guts to go after it, but if you did, more power to you. Good return. To bookings.com. Even this thing, even the dogs of all dogs, where you're probably not going to have a lot of international travel anytime soon, popping back up to $1,400. This is where this started gapping down on the 16th. But like I said, volume's going to be about the same. So it's not an incredibly bearish signal, but it does look like probably a lot of the easiest money on a lot of these are off the bottom. BlackRock, the Fed is choosing them to buy all their bonds. Nice pop and gap higher today, went to $439.99, but giving a lot of that back to $112. Again, a lot of these stocks were massively shorted over the last few weeks. And of course, good way to have a low is have everybody decide that the end of the world's coming, and then it doesn't. To CNP, which is Centerpoint Energy, a nice little bounce yesterday, small gap higher a little bit farther, but again, not a lot of juice. You want to see these things kind of spring off the bottom if they're going to be a V-shaped recovery. If they kind of come off of it with light volume, probably going to be a U, and a long time going sideways. Capri CPRI up light volume, not a lot there. Cintas, a nice move again. Not the kind of juice that you want to see, but maybe by the end of the day, there's more volume. But you came down with almost 2 million shares. You're up in about half of that volume right now. So I don't think we're probably in the next couple of weeks going to see a lot of people go back to work. But 3 weeks maybe, you can see a lot of people go back to work. I don't know a lot of new hires, which is when Cintas would probably do the best. A little doji on Delta Airlines today, a little bit better volume, $33.28. That was off a $19.10 low on March 18th. DHS, a nice little pop. Discover Financial, and again, these things are going to be problematic. I don't see how you get around the problems with credit cards in the very near future. Yeah, will they bounce now? I think that they're much safer long positions and better squeezes still to be had. Same thing with the real estate. You get a little bounce, but not much volume today. In D.H. Horton, it's a nice reprieve. But guess what? If I had this, I'd be selling it. This is into the gap down to the 16th that had 8.4 million shares, and you got half that right now. D.H. Horton, in real estate, the time to punt is now. Darden Restaurants, a little better. And again, these guys have found a way to stay open and doing Uber Eats and Grubhub and all the other kind of stuff. This came right back into the gap down that goes back to the 16th and the 12th. But again, if I was probably in this stock from the lows at 26, I would be selling the living daylights out of this right now and ringing the register. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. Investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're going to go to John in Orlando. How you doing today, John?
How you doing? Good afternoon. I have a question on Gilead Science. What would be like a buying point for it?
Well, right now it's in a trading range, and that trading range is from about $66 to about $80. So if it's just bouncing around, you want to try to buy it at that gap level. I don't know if you get it, but you're down on light volume today on that smaller gap. I mean, you're looking at support now is around 70. That puts $5 or more to the downside on the risk. And you know what? The question is, you don't own it right now, right?
No.
Okay.
I'm looking to get in.
I don't tend to focus on an individual stock all that much, unless I've got a fundamental reason for thinking it goes higher, like it's in 5G or something like that. This just looks like in a big trading range. So, ideally.
I'm sorry. They're into infectious disease.
Oh yeah. I know what they are, but the chart tells me they're in a big trading range. Right? It's bouncing around. Now, you got a higher high on lighter volume at the last high. That tells me generally I don't want to buy this stock. I want to look elsewhere unless it tests that $65 range on a lot less volume.
Oh, okay.
So the problem with this one is it held up well, so it didn't get a lot of shorts, and it's not getting a lot of squeezes, right? So it's kind of cursed by actually holding up very well while everybody else is looking at other stuff moving. It's not a bad chart long term. Short term, though, what you have is everybody looking everywhere else. They're the baby that gets the keys jangled in front of it everywhere except this stock. And it's not a bad looking chart. It held up well. The biotech was probably the best sector all the way through the last 4 weeks. But the biggest ones off the floor are going to be the ones that were the most heavily shorted. But at the same time, these probably actually long-term are going to be much better off, right? It's going to be the tortoise and the hare. The hares are all the ones that were massively shorted. But like I think a lot of those massively shorted stocks are probably going to find a lot of resistance anywhere higher after today. The ones that like this one, the problem is it's just not a good place to buy. You really needed to buy that $64.41 low back on March 16th as it pierced the gap. That was the buy point. And now you just need to sit on your hands. But if you get in a good opportunity, maybe some bad news one day in the biotech field, maybe you get another shot at it at $65. I'm not stuck on buying this stock alone, but there are a lot of biotechs that look really good. So it's not a bad sector. You may just find that you either have to wait or find a faster horse in that biotech space.
Well, I'm looking for like a long-term, it's a retirement plan money. So park it somewhere where it's kind of safe.
Well, you can't say that this didn't hold up well compared to all the other stocks. It had great relative strength. It was back up at the highs when everything else was failing. Now you got some big swings in it, but I think it's good, and you're probably in the right sector. I like that biotech sector in that it's been kind of the weak one for the last 3 years, and I think a lot of the political gunslinging for the biotech sector is probably over for a little while. You may have to go to November for the election. Hang on a second.
All right.
Okay. But I think you're okay. If you're putting it in some kind of retirement fund, I just buy a little every week until you get a full position. There's no reason to chase this down. Okay?
Right. Okay. Thank you. Thank you for
enough. Bye. Okay. And we're up 96 points on the S&P cash, up 1,073 on the Dow. Nasdaq's up 168. Russell's up 28. Crude oil up 50 cents. So what can we see? Okay, let's go through a lot of these other ones here of the movers and shakers. We won't get to all of them today. Eastman Chemical Corporation, a nice bounce on this one, but very, very short on the volume. Again, I think we're hitting fairly strong resistance and hitting it today. I wouldn't be surprised for these ones that have light volume going through these big gaps down to at least pull back into that trading range where the volume was. Expedia, another one in the travel sector. Again, you're getting a nice bounce off the lows, but not a lot of volume so far today. Maybe that changes by the end of the day. But if I was long that in the travel sector, I'd be looking very hard at taking my cash. Ford Motor, a nice pop on this one today. It's holding the higher end of it, and it's got some decent volume into it as we go back to the gap down, which is on the 12th, with 89 million shares. You've got 147 million shares now. So it looks like not too bad in Ford, actually, on a chart basis. And that may be all you need to know. Okay. Fleet Core Technologies, nice move higher. All of these have more than 10% moves today to the upside. But again, not a lot of volume on this one. You want to see how it closes. FLT is the symbol on it. But I'm seeing enough of these that make me think that we're pretty close. Unless we get a ton of volume at the end of the day, we're probably close to the first big bounce and starting to see a more traditional market that moves maybe 1 or 2% a day instead of 10 or 20. 21st Century Fox, nice move back into this gap down from the 16th. That gap had 9.6 million shares. Today you're up on about 5 million so far. So you want to keep a look at that. The Gap stores finally started moving a little higher, but not a lot of volume. Resistance is going to come in right at about $10 to about $11, and it's going to be rather fierce. You're up on about half the volume that you gap down on. Holly Frontier, talk about not getting any love in the energy sector. You got to bounce. It's not that much, and it's with half volume. Harley Davidson, going to be a tough row to hoe going forward for it, selling any kind of new bikes and numbers, that kind of stuff, boats, cars, planes, all going to be very tough sectors going forward for at least 6 months. They certainly are the second story, not the first story, stocks that we talked about the last few days. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Quick question on FCX, and you filled the gap down from the 16th. That was on 40 million shares. You're doing it on 28 million shares so far. Not bad looking, and of course about a 50% move off that $4.85 low up to 767 today. But that's probably it. Like I said, a lot of these things look like they're hitting resistance today. Also have some other questions here. Where's a good place to answer? Good pullback reentry spots. What should you look for? I'm looking for double repo patterns back off the lows. I wrote about it in my newsletter this morning. But over the next week or so, setting up those slight pullbacks in and below a 9-day moving average, and then the next move above it where we start moving higher in the stocks that are going to run from here on. Okay, so that's it. Question about XOM. energy is going to be tough until you get the Saudis off from dumping oil. You bounced again off the end of the world lows. The question is, do you go back and retest them on these energy stocks? If the Saudis don't get off of it, you can see these things at least coming back 50%. So I am not a big fan of chasing the energy stocks until, or maybe you get to talk to the Saudis themselves and they tell you when they're going to get off of it. But until they get off of it, it's going to be, you're going to have the bounce because the entire market's bouncing. But, man, it's going to be a tough road until the Saudis get off the throat of oil prices. I'm not a big fan here other than the fact that it did bounce. We talked about Boeing already. I don't really have time to finish with JetBlue and DAL other than the fact that Boeing's probably the best out of that bunch. And I don't think there's much you can say about it. And, of course, the best part of Boeing in the huge bounce off that $90 low is probably it. In the meantime, sell when you can, not when